What's up, everyone? Welcome to this week's video. Hope everyone had a good week, has some solid plans for this year's Cinco de Mayo. I know it's going to be a little bit different, but hopefully still fun for everyone. And make sure, because next week is Mother's Day, that you know what you're getting your mom and your grandma, for that matter, for Mother's Day. So this week, the indices were pretty much flat, but that doesn't really tell the whole story. You can see the Dow Jones went from 23,775 all the way up to 24,764 and change, and all the way back down to end up with a very minor loss. We're going to call that flat on the week. NASDAQ, similar item, going from 86.34 and ending up at 86.004. S&P going from 28.36 to 28.30. Not much movement there, but there's a lot we're going to analyze as to what caused the sudden spike up and then the drop down lower. First item, month-end rebalancing. As I pointed out last week, this was something that we needed to prepare for. Previously, we had a lot of buying going into month's end because all the equities were dropping. This month, all the equities were up. This is one of our best months ever, if not the best month. And I think Amazon is a prime example of what happened, no pun intended. But as you can see, we started off the week just selling because this is the last week of the month. So people just started selling Amazon. Amazon's up huge. And this is way before earnings. Their earnings weren't until after the close on Thursday. So this tells you that people were selling it well ahead of those earnings. Similar things happened for a lot of the other tech stocks, Facebook, Apple, Microsoft. Similar items, even though I will say Microsoft has held in pretty well. And that's definitely still a stock I think has potential upside, even with a down market. Another item we touched upon last week was the Gilead report out of China published by the WHO, which said that Remdesivir was not an effective treatment for the coronavirus. However, this week, the NIA, using a test with a placebo, showed that patients using Remdesivir recovered 4 days faster, and Gilead's own study showed that 5 doses was just as effective as the current norm or standard of 10 doses. And as a result, you can see from the low from the last week's publication of a WHO report that was then removed to the high post NIA and Gilead study release, we had an 18% jump in this stock. Again, this leads me to be more suspicious of the WHO and their actions on why they even published a report from a study that was never completed. Doesn't make sense to me, but this is what happened. This is the move in the market, and we kind of called their bluff last week, and this is what happened this week. We also talked about the S&P 500 going to the Fibonacci 618 retracement level of roughly 29.35. We poked just above that, getting to about 29.50, and then consequently failed. Again, I guess the market rebalancing and some of the news that we'll explore in a second came at the perfect time. But I suspect that we will trade in a range between the 618 level that we just hit, the high that we just hit this past week, and one of these lower bands, as you see here, represented by the 50% retracement level, and then the Fibonacci 38.2 level. I suspect that we're actually going to drop below the 50% retracement level of 27.90 to start the week off, and that's going to send us back down to that lower band, closer to 26.50, and that's because of these headlines. Warren Buffett at the Berkshire Hathaway annual meeting said that he sold out of all of his airline holdings, about $4 billion worth. And, you know, the airlines have been hit hard. And if Warren doesn't see value in something that's been hit hard, then that's an issue. He also said that he didn't put much money to work during this massive drop that we just experienced last month because he doesn't see much value. Now, there's some other highlights in the link below. You can read about them. But if the most legendary value investor of all time doesn't see value, then I'm assuming many of his followers are going to dump stocks. This will probably trip a few algos that are programmed to trade based on his words. And that could definitely, we could see a 5% down day on Monday because of it. Also, and I believe this is even bigger and what caused the sell-off in the latter half of last week, was that Trump threatened China with new tariffs as punishment for the COVID-19 pandemic. Now, if you recall, people thought that he was bluffing with tariffs and more tariffs, before this whole saga started, before the first tariffs were put on. But now I see these tariffs as a very realistic and viable thing that can happen in the near future. The only thing preventing him from putting on new tariffs was that he needed the stock market to do well, and the stock market doesn't like these tariffs. But now he has something to blame the stock market downdraft on, which is COVID-19 and these shutdowns. However, he still wants to appear tough and in charge to his followers, the voters that elected him. So he's got to act tough on China and, blame them for something. And this is a good way of kind of laying down the law, if you will. Finally, we haven't seen this headline in the United States yet, but it's happening in the UK and in India, which is food inflation. Because of the demand of perishable goods has gone down during the COVID-19 lockdowns, people are buying canned goods and other foods with longer shelf lives because they don't want to go out and go shopping. Farmers have had to reduce their risk in, say, fresh vegetables and chicken. I'm talking about the fresh chickens. And as a result, when the economy opens up, people are finding that vegetables and livestock prices have jumped, making it very difficult for them to get these foods at a reasonable price, and these prices are higher. And as people are just getting back to work, trying to get out of debt that's caused by the coronavirus, this could be an issue going forward. Again, this hasn't happened in the US yet, but this article talks about what's happened in India. You can look up articles about what's happened in the UK just to maybe mentally prepare or physically prepare yourselves for this possibility of food inflation in the United States. So again, I see us heading down to test that 2650 level on the S&P, unfortunately. Unless we get a really nice headline at the right time, which is Monday, so that we don't cross that 2790 level, we're going to go down to at least that much. I'm hoping we don't test those previous lows from 2018, but only time will tell. We just can't have a negative headline happen right when we hit that fib 382 level. But on the way down, what can we buy? Because let's face it, that's why a lot of you are here, for recommendations on stocks to buy. I'm going to go against the Oracle Omaha and recommend airline stocks as well as some bank stocks. I have some entry levels listed here. Again, these are trades you're going to want to leg into, because should we drop and should we get a second wave of coronavirus that appears to be uncontrollable, the selling is going to be intense, and we are going to hit new lows in the global markets. So you want to enter these in partial positions, and if your portfolio size allows it, I would strongly recommend selling puts at these levels so that you can collect premium if the stock stays flat or goes up. And if it goes down, you're buying it at a slightly lower level and lower risk than just jumping straight into the stock at these prices. I'll also add that you don't really want these to be too big of a portion of your portfolio unless you have a very long time horizon, because I could definitely see these trades taking a couple years to really become significantly profitable. But when the market does turn around, when the economy does come back, these will set your portfolio up to bounce back much harder than the S&P 500. So the fun news this week, and this video, you'll see the link below, was sent to me by a friend. It's regarding a World of Warcraft disease, if you will, named corrupted blood, that is almost a parallel to the COVID-19 pandemic we're experiencing today. I recommend that you watch the video because they explain it much better than I can. But basically what happened was that there was a virus, if you will, that would slowly drain the energy out of a player while they were on a mission. And what happened was these high-level players would then spread the virus to lower-level players who could not survive this corrupted blood, this virus, as long, and they ended up dying. And World of Warcraft had to do a reboot on the game in order to make sure that not all the lower level and beginner characters are just dying for literally no reason of their own. And this game has actually been used by many economists and epidemiologists and studies on how to deal with global pandemics like we have today. And it's just an interesting video. I highly recommend just watching through the whole thing rather than listen to me talk about it. So thanks for watching this week's video. Hope everyone has a good rest of your weekend. And for those of us that are reopening tomorrow, please stay careful. Keep your mask on. Let's continue to practice social distancing when possible, when appropriate. And we'll see you all next week.